market update. So there's a lot of different things going on in the market right now, and I'm going to share with you what we saw last month in terms of overall performance of the real estate markets here in Texas. And I'm going to outline the 4 major cities in Texas, and I'm going to give you the numbers, but I'm also going to give you some of the commentary behind the numbers so that you guys know how to use this in your business and how it will affect you in your business as you're going forward. So every week we do a new update and share new tribal knowledge. Just today, all the final April numbers came out, so I'll be able to share those with you. This is the roll-up chart for Texas. So last month, the average price was $432,000, up 17.5% versus where it was the same time last year. Houses are selling in a very quick 30 days. Right now we have a 1.3 month supply of inventory. Last year we also had a 1.3 month supply of inventory. For those of you guys who are familiar with days on market, you guys are, this is the time that it takes for a property not to sell, but actually to go under contract, okay? Months of inventory is a little different. Basically what that means is if we stopped listing houses today based on the buyer demand that we've had over the last year, right, divided that by 12 so we can get the average buyer demand by month, this is how long we would have an inventory of homes for sale. Or this is how quickly we would be out of homes for sale. So it's 1.3 months supply of inventory if we just stopped listing houses today. Now, in a normal market, that number looks closer to 6 months of inventory. In a normal market, that number looks closer to 6 months of inventory. When you have very low inventory and very high demand, how does that show up for your average and median price? It goes up, and that's what we've been seeing over the last many years, not just the last 2 years, but over the last many years. And right now we're surviving somehow on 1.3 months of inventory. That number, and you'll see in some of the markets, has grown a little, but for the most part it's pretty steady. But my forecast is we're going to start seeing a little bit more inventory, in part because of the changes in interest rates, right? And it's not to say I don't want anybody to walk out of here just saying it's over. It's done. I don't want any of you guys to walk out of here like that, but I do want you to know that there are some changes coming, and I want you guys to be aware of them. Last month, for example, closed sales were down. They were down 3.5%. It's a very rare thing that I'm reporting a closed sales number being down. But typically when we see an increase in interest rates, there is a short-term, not reduction in price. As you can see here, prices were up almost 18% year over year. But we typically do see a short-term decrease in the number of sales. What are people doing as they're taking time off from buying? What are they doing? Somebody said waiting for the market. There's not going to be a market correction in this market, and if you're talking about price. Someone said they're waiting for interest rates to go back down. They're going to be waiting a long time. What else might they be doing? Changing their strategy. What else? Saving. Now I got to save another $5,000, $10,000, right? So that my payment can be the same as it was under the last interest rate. Now I'm going to have to make the decision, do I want to buy down my interest rate, right? Now I've got to make the decision, should I sign that lease again and just stay exactly where I am? I think it is an adjustment period, right? It's something new. It's something I don't like. It's something that it's going to take me a little while to adjust to. So first I have to abstain. Right? I got to let everybody know I'm going to slow it down for a little bit. Okay, I've said it, I've done it, and then what? I'm still in a house that's too small for me. I'm still in a house where my rent period is, my lease is coming up, right? And I still am ready to move to a different place, right? So at some point, what do? It's a technical term. Write this down. You suck it up. Okay? Okay? That's it. Yes. Yeah, it's a technical term. You just suck it up. And then are you able to afford the same price house? You might not be able to. Listen guys, a 1% increase in interest rates reduces our purchasing power by 11%. Okay, that's a big deal. So if before we were able to, for example, buy a $330,000 house, now we can only buy a, let's say a $300,000 house, right? That's part of the sucking it up, right? Now I got to change. Or now I have to save more and increase my down payment. But I don't know if you can save as fast as the Fed is increasing rates, right? Now, you also might consider selling something, right, to be able to do it. So some of the other options. The forecast for 2022 in this bottom right-hand corner, I'm expecting that the sales volume will be up probably about 5% versus what it was in 2021. Because that's not dissimilar to what we saw in 2020 versus 2021. And then the average sales price, I'm expecting that to be up around 20% by the time that we finish the year. Because even though our inventory levels in some markets are actually going up, they're not going up at a rate that would cause it to shift from a seller's market to a buyer's market. Literally, we'd probably have to build somewhere between 50 and 75,000 more houses in Texas to be able to see that happening. And just to let you guys know, between 2020 and 2021, we only built another 10,000, builders only received another 10,000 building permits, right? So we went from 160,000 building permits to 170,000 building permits. 2022, we're about on track to hit that 170 to 180 number. I think adding another 10,000 units, I'm pretty sure that all of us in this room, if we got together, we could probably absorb that just here tonight, right? Let's talk about Houston. Last month, the sales price was up 15% to 426,000. Days on market dropped from 40 days to 33 days. Houston was the winner this past month. Houston was the only major market that the sales were almost at 0% decrease year over year. The sales were actually down 0.2%, meaning we sold like 50 fewer houses here, right? So it barely touched this Houston market. So that was a nice surprise versus all the other markets. Months of inventory right now in Houston, 1.4 months of inventory versus 1.3 months last year. Pending sales are down, but they're only down 1% year over year versus some of the other markets in Texas. It's down much more significantly. Active listings are up, so we're seeing more active listings in just about all the markets, and we're seeing pending sales down in just about all the markets. The forecast for Houston for 2022 end of year is that sales will be up in the 10 to 15% range. We had a really great start as we started in January and in February, and March was a great month for us as well. So my guess is it's going to be up in that 10 to 15% range. Average price up in the 15 to 20% range, just because again, we are in a situation where we lack inventory. In San Antonio last month, the average price was $396,000, up 20% year over year. Sales were down in San Antonio 8%. Pending sales are down versus where they were the same time last year. And we added almost 500 new active listings in San Antonio. Forecast for that market up 3 to 5%, and for the number of sales, and for the average price up 15 to 18%. In Dallas, we saw a big increase in the average price, up 19% to $486,000. Their sales last month were down. They were down 3%. Right now, they have very little inventory in Dallas. They have 0.8 months supply of inventory. One of about 2 markets that has under 1 month supply of inventory in Texas. Pending sales were down 4%, and active listings, this is a big jump. Active listings were up 33% year over year. But guys, I will tell you, it is not, even though you're seeing 9,200 active listings in Dallas, it's not uncommon to see closer to 40,000 active listings in Dallas and in Fort Worth. So this is a big, we're still, again, and this is why you're seeing those big jumps in that average price. Forecast for Dallas, sales should be up somewhere between 1 to 3%. Last year, Dallas was the only major market in Texas where sales were actually down 2021 versus 2020, but it wasn't a big down. It was only down by like 1 or 2%, and the average price was still up in that 18-19% range, just like it will be as we wind out 2022. For Austin, I had to read this twice. The average price in Austin, $680,000. After I read this with a defibrillator on myself, I did a little research, and as it turns out, the word Austin comes from the Latin root word meaning San Francisco. Look it up. Look it up. But wow, I'm just kind of blown away by this, still reading it now. But the sales were up 19% year over year. Days on market, only 18 days before they go under contract in Austin. Closed sales down 6% year over year. Operating right now on 0.8 months supply of inventory, which is actually almost double what it was last month. So again, we're seeing situations now where we're adding inventory in some of these markets. So for example, if you look at the total active listings, they were up about 50% versus what they were the same time last year. Pending sales in, I gotta tell you, these people in this other room, they love me. Now you guys, I think we still have some work to do, but they really are excited about this market update. Thank you guys, I appreciate that. You guys just continue to play it cool, okay? That's okay. Pending sales also down in Austin, like we're seeing in a couple other markets as well. But I don't think that's going to hold Austin back from hitting an increase in sales, up 2% year over year. Last year, they were up 2% year over year, and they only had a 0.4 month supply of inventory. And the average sales price probably going to be up in the 25 to 30% range versus where we were the same time last year. So big changes in average price, all increases. We're starting to add back some inventory finally, but I think that's just people having a little indigestion over the interest rates, and then at some point they'll get over it and get right back in the market. So that's what I'm forecasting.